This is a lecture from OpenTuition. To benefit from the lecture, you should download the free lecture notes from opentuition.com.
Well, having spent from chapters 2 through to chapter 10, and many hours indeed of hours together looking at income tax, we now move to the second and in fact the smallest tax within our syllabus, national insurance contributions. So we go from the sublime to the ridiculous, as it were, where we had huge amounts of volume of information to take in when dealing with all the details of income tax, now to, again, a very small section, a very small taxation in terms of our syllabus, national insurance contributions. Now then, don't be put off by the name, national insurance contributions. That name is based in history, but what it was basically set up to do was to provide for various state benefits, like, for example, pension. All it is now is just another taxation that goes towards the overall revenues of the government, allowing them to pay out, therefore, all of their various bills. All this money pours into the Exchequer, to Her Majesty's Revenue and Customs there, and it's used, of course, throughout government, whatever area that may be. State benefits, of course, being a large part of the overall government burden, therefore, from which they have to raise taxes. So what do we deal with in terms of NICs? What we've got and what we saw in income tax is two main forms of income. They are the forms of earned income, being employment income for the vast majority of UK taxpayers, but also, of course, and very importantly, for the self-employed trading income. So it is that national insurance contributions will represent a further direct taxation in addition to income tax placed upon an employment income assessment placed upon a trading income assessment. The first of those that we deal with now, we deal with employed earners, and we will discover that not only does an employee incur national insurance costs, but also for the pleasure of employing that employee, the employer may incur a significant national insurance contribution cost as well. So let's look at what we've got. Now, the names that are given here to our NICs, as we'll know them from now on, our national insurance contributions are NICs. They're known by classes, and by far the most important one is Class 1 contributions, because it's Class 1 contributions that deal with employed earners and deal with both employees and employers' NICs. As we've just stated, this Class 1 NIC is paid by both employees and employers. And that brings us immediately to an issue about how this particular tax will be tested. And again, as we've seen throughout our studies here, how important it is to very carefully read the question that is posed, most especially when that is an objective testing question. Those 2 mark objective testing questions there that you face in section A, you also face them, of course, in the section B, but in section A, across the board, all sorts of taxes. It's very possible, very probable indeed, that you may face at least one of those questions in this area of national insurance contributions. Now, when it comes to Class 1, you're going to have to be very careful to interpret what they say. Are you going to be dealing with all Class 1 NIC contributions, or are you only going to be dealing with the employee contributions or the employer's contributions? So it is essential, therefore, that when you look at any of these questions, you read this one's requirements very carefully. It is all too often and sadly the case, as I think I've said before, that too many students only take a quick glimpse at the question's requirement in their eagerness to get into and read the information within the question. One informs the other. You must get your head around, first of all, exactly what they have asked you to do. If you misinterpret on an objective testing question, you may spend many minutes earning no marks at all. That is something you can ill afford within the examination room. So critical that you've read that carefully. So I'm forewarning you here. Make sure that if it is Class 1 NICs, do they want all Class 1 NICs? i.e. both employee and employer contributions, or do they specifically ask for employee or employer NICs there? So how do we calculate them? Firstly, for employees here. Contributions begin when the employee is age 16 or over. Clearly our employee will be. And for 2018-19, the rate of employee Class 1 NIC is at 12%. Or as we'll see as we go through this paragraph, the main rate is at 12%. It is paid on cash earnings. So it's not going to be chargeable on an employee in relation to the other assessable benefits that might arise that are provided by an employer, like a car benefit, a fuel benefit, for example, there. This is purely payable in relation to cash earnings. So your salary, your wage, any commissions, any bonuses that are paid to you, that is where NIC comes into play. But we only start paying on our cash earnings once the earnings concerned exceed what is a threshold of £8,424 per annum. And we only pay at that 12% rate up to an upper limit of £46,350 per annum. However, when we go above £46,350, sadly they don't stop these NICs, but they do become a much more friendly rate, because for earnings above £46,350 per annum, we have a rate of just 2% payable. Now again, there's no worries for you here about remembering these various rates and these various limits in relation to which the NICs are payable. If you look back, of course, at the beginning of your notes, you will see your rates and allowances information pages. And one of those here covers NICs. And this is the information that will be available to you in your examination room. So here in relation to Class 1 employee, there's your 8424 limit up to which there is nothing to pay. There is your lower limit and your upper limit for this purpose. Any earnings, any cash earnings between those lower and upper limits, we pay at 12%. Go above 46,350, we reduce to 2%. Obviously, and we'll deal with them as we come to them, we've also got Class 1 for the employer and the various other classes, but again, we'll come to that as we go through our chapter notes. So here, the levels in relation to which we pay the NIC and the rate at which we pay the NIC, that is information provided to us. Back to our notes. Okay. Employees, therefore, we've got our lower limit, our upper limit, nothing below the lower, 12% between lower and upper, and then 2% above that upper limit. The contributions will only cease when the employee reaches pensionable age. Again, it's not going to be an issue so far as you are concerned within your examination question. Clearly, it's someone that you'll be computing NICs for who has not reached pensionable age. Employers, well, theirs is an easier calculation to perform because there's only one rate of employer Class 1 NIC, and it is, well, a slightly higher rate than the main rate for employees, 13.8%. Again, it is on cash earnings, as we saw for the employee. And the only limit that we have to look at is that threshold of £8,424 per annum. Above that figure, everything there is at 13.8%. There's no upper limit at which it becomes a lower level. Everything above 8424 is going to be at 13.8%. Now, of course, what that means is that on income here, cash earnings between the lower limit of 8424 and the upper limit of 46,350, that between those two figures, you've got the employee paying at a rate of 12% and the employer paying at a rate of 13.8%. Well, those are big, big numbers that we're talking in terms of, albeit, of course, There's nothing on the first 8424. Go above 46,350, then it doesn't change for the employer. It's 13.8% across the board above that threshold of 8424. But for the employee, it drops to 2%. Now again, that 46,350, it's not a number taken at random. What we know, of course, is that we have a personal allowance of 11,850, and you have a basic rate band limit of £34,500. Well, you put those two numbers together, and what you've got is £46,350. There, this upper limit in relation to your employment income, your cash earnings, for purposes of the 12%, the main Class 1 NIC rate for employees. What it means is, as soon as in isolation your employment income would take you into being a higher rate taxpayer, there is the level of income that would take you into the higher rate band. 46,350 minus 11,850 would bring you to 34,500. So if your income is above 46,350, you become a higher rate taxpayer. Or very specifically, if your employment income is above 46,350, then they're not going to charge both 40% Class 1, 40% income tax, as you are chargeable on a higher rate taxpayer, and the 12% Class 1 NIC employee rate. So it drops down, therefore, to 2%. Down from the 12%. That doesn't, of course, happen for the employer. The employer, as we've said, all the way through, from above 8424 to whatever figure we're talking in terms of, it's 13.8%. But at least it makes it an easy single calculation to perform for you in the exam. There's then Class 1A contributions. Now, these are only payable by employers. Only payable by employers on taxable benefits provided to employees. And that rate is your normal rate, 13.8% there, multiplied by the assessable value of those benefits. So a standard single rate, 13.8% on every pound of assessable benefit. So it's only the employer who has to pay NICs in relation to the assessable benefits. The employee only has NICs in relation to those cash earnings. But again, we can see that these are large amounts, therefore, given the amount of employment income that exists within any economy. These are very substantial amounts of taxation. So although it's only small in the context of what we have to learn, it's a very significant figure, of course, in relation to the amount of total revenues that go to HMRC. One other little point in relation to the employers' NICs, there's something called an employment allowance. An employment allowance here. Now that employment allowance is a deduction from the employers' NICs that is a figure of £3,000 per employer, not per employee. This is per employer there. And that will serve to reduce the overall employer's Class 1 NIC payable. Now, we'll pick it up in the notes as we go through, but is purely specific to employer's Class 1 NIC payable. It is the only amount, the only NIC from which this employment allowance of £3,000 may be deducted. So, very obviously, if the employer's Class 1 NIC for the tax year was £5,000, the amount payable reduced by £3,000 employment allowance, the company or the employer, might be again an unincorporated trade, but the employer would then only have to pay £2,000. If, of course, the overall employer's Class 1 NIC for the year was less than 3,000, say 2,000, then you took 2,500, I beg your pardon, then that would simply be reduced to nil. They don't give you money back here. They simply reduce what would otherwise have been the employer's Class 1 NIC. But it is only applicable, this deduction, to the employer's Class 1. Again, down here we can see it does not reduce the amount of employer Class 1 NIC payable, doesn't apply to Class 1. Of course, it doesn't apply to the employee's NIC either, only the employer's Class 1 NIC. A couple of other little things that you need to be aware of. The employment allowance doesn't now apply to companies where a director is the sole employee. Again, an individual may set up what is an owner-managed company where they are the only employee. They are the director of that company, they're the shareholder, they're the only employee of that company. If that is the case, there is no employment allowance to put against any employers, they're the company's NICs. This restriction has been introduced because the employment allowance is targeted at businesses which support employment, rather than an individual who decides to run their own one-man business as a company, with them as the only employee there. That's the idea. The non-availability of the employment allowance would be particularly relevant in certain tax planning scenarios, for example, when deciding whether a sole trader with no employees should incorporate their business, and then associated decision as to whether to extract the company's profits, whether the director is the sole employee, as either director's remuneration, employment income, or upon which NIC is payable, or as dividends. That is an issue that we take up in terms of Chapter 26 there, so we'll discuss that later on. Okay, just have a little look through the information here in example 1, and look very carefully at the requirements. Now just pause that for a moment while you think about what do I need to compute here. Remember how important it was that I said that you needed to interpret the question. Read that carefully and then think what NICs would be applicable so far as this requirement is concerned. Okay, well, let's see if we have indeed interpreted that requirement correctly. Look what it says. Calculate the Class 1 and Class 1A NIC liabilities in respect of this employee. So they're not asking us the amount of contributions payable by the employee, but in respect of this employee. So what are they? That means that we've got both the employee Class 1 NIC to compute. We've got the employer Class 1 NIC to compute. And we've got the employer Class 1A NIC to compute. So again, had we misinterpreted that and just thought, oh, calculate the Class 1 and Class 1A NICs in respect of the employee, and thought that it was, well, what contributions are payable by the employee, you'd have thought, well, that's only Class 1. So it's a trick question because Class 1A is only employer. But it's not a trick question because the contributions payable in respect of that employee are both the employee and the employer's, all of the employer's contributions. So all of these need to be computed. Right, how do we then go about doing that? Well, there we've got the assessable benefits. Those assessable benefits, non-cash benefits provided, they of course are subject to Class 1A NIC, I should try to say there. So we've got in total, what have we got there? Some £10,720. So that 10,720 would be at the standard 13.8% rate, whatever that comes to. Again, you can check the numbers for that in the back. We've then got the Class 1 NICs. So that's based on the cash earnings. And there we go. He's paid £50,000 per annum. In terms of 50,000, right, 50,000 is above our upper limit of 46,350. So the 12% band that exists above 8424 and up to 46,350 is payable in full. Then on the bit from 46,350 up to £50,000, the level of employment income, we reduce to the lower level there of 2%. So how do we compute the employee class 1 NIC? There's nothing payable up to 8424. We've got the complete band, the 12% band, so 46,350 minus 8464. The entirety of that main rate band is at 12%. Had we only got £40,000 worth of employment income, we'd have just had 40,000 minus 8464 at 12%, and there'd be no 2% band to apply. We, of course, have got £50,000 of employment income, therefore we go above 46,350, so 50,000 minus 46,350, the excess above 46,350, that will be at 2%. And again, I'll leave you to use your calculators to work those numbers out and then check through with the answer in the back. That leaves, therefore, just the employer class 1A, so class 1 NICs to deal with. Again, we know we have the same lower limit threshold of 8424, below which, up to which we do not pay, here the employer. So there's a lower limit below which nothing is payable, but there is no upper limit. So as we said, it's a single calculation that now needs to be dealt with. 50,000, the full extent of the employment income, minus the only threshold limit that applies, the 8424, don't know where that's came from, 8424 there, I think I put 8464 up there as well. I'm going back to old figures, my apologies, hope you didn't get confused on that, that's 8424 there, again my apologies. So 8424 up to 50,000, that is all at 13.8% there. Put all of those numbers together, do the calculations. Again, once again, my apologies for having kept on saying 8464. Again, I've gone back to an old figure of 64 at the end rather than 24 as it is now. So I hope that didn't confuse. Again, once again, my apologies. Right. Work through those calculations, check it out with the answer in the back, make sure that you're happy with it. You will be aware, of course, that we did speak about an employment allowance that would be available to go against the total of all employers' Class 1 NIC liability. What they've asked us for here, and it's likely to be the case in any exam question, is just the amount of these liabilities in respect of this employee. So you shouldn't be deducting the £3,000 employment allowance because that deduction is from the total of all of the employer's Class 1 NIC liabilities. It is not a deduction in relation to a specific employee. That is a deduction from the total. Okay, check that out, as I say, and then we move on to looking at the self-employed. Again, if we've either got employment income or trading income, the national insurance contributions are payable by us. To begin with, there are two types of contribution now payable, again known in terms of the classes of NIC that we talk about here, and they are Class 2, which is a very, very small amount that is payable indeed. So again, of course, if they ask you to calculate these contributions, then on a Section A question, it is vital that you pick this up and you know that it has to be computed. But in terms of reality, it's a very small sum that we're talking in terms of. It is a flat rate of £2.95 per week, payable as ever from their 16th birthday up until they reach whatever is their pensionable age. Only payable when the tax-adjusted trading profit assessed for the relevant tax year exceeds a small profits threshold of £6,205. Again, if we go back to our notes, There we go, Class 2, £2.95 per week. There's the small earnings exemption limit, 6205. We'll also see where we go in a moment, and that is with the main amount of Class 4 NICs payable by these, and the main amount of NICs payable by the self-employed, they being Class 4. This mimics the Class 1 employee rates by looking at the same lower limit threshold, below which you do not pay, above which you go into a main rate, but only up to an upper limit of 46,350. But we'll see that the main difference is, though below the lower limit, nothing, above the upper limit, 2%, just as we had for employee Class 1, the main rate that exists between the lower and upper limits, well, that's at a friendlier rate than it is for the employee. That is a mere 9% there. Back to our notes. If therefore our individual, our self-employed, our unincorporated trader has been trading for the entirety of the tax year, and the tax-adjusted trading profit of that year, the assessment for the year, does indeed exceed the small profits threshold of 6205, then that means that 52 weeks at £2.95 per week will be payable. Then the big money, Class 4 contributions. Again, payable by the self-employed, again on the assessable trading profits of the tax year. Now you already know how to work out, having dealt with Chapter 6, how much trading income assessment there will be for any tax year, from the very first tax year of trading all the way through to the very final tax year of trading. We can work that through. And what we have here is, as we've just seen, the same threshold where up to 8424 there is nil to pay, but then a main rate of what is 9% between 8425 and 46,350. So above 8424 up to 46,350, we've got our main rate of 9%. For trading income in excess of 46,350, just as it was for the employee, we revert to a lower rate of 2%. Again, same idea. Who pays? Just again, if the employee, that should be the self-employed there. If self-employed, not employee, is 16. Now, it's not likely, of course, that many people up to the age of 15 are going to be in self-employment, but it would only begin at age 16 and, of course, go through to at the start of the relevant tax year, but contributions cease when the taxpayer reaches pensionable age at the start of the relevant tax year. Again, that's not going to be an issue for us. The individual will be within that age band, and therefore our contributions will be payable. Okay, let's have a look therefore at an example. Having dealt with an employee with employment income of 50,000, now we see a trader here has got a trading profit assessment of £50,000. Again, look at requirements very carefully. Here they're very specifically asking for both Class 4 and Class 2 NICs. What they may do is ask the same question by asking you to compute all NICs payable by Jerome the trader. Now, that would disguise the fact that it is both Class 2 and Class 4. You need to know that all contributions would be both Class 2 and Class 4. There again, you may get a specific question that only asks for the Class 4 NIC contributions, and that's it, nothing else for you to do. So yet again, whether it's employee or whether it's self-employed, look carefully, look very carefully at exactly what they're asking you to do. Because the calculations, as long as you use the right numbers, unlike what I did a few minutes ago, the calculations are very, very straightforward there, especially as you've got your rates and allowances, of course, provided to you. So make sure you've interpreted the requirement correctly. So here, therefore, for Jerome, we have got, well, obviously, Class 2 NICs. We've got there a trading profit assessment for the tax year, so being self-employed for the whole year, so 52 weeks times £2.95 per week. There's that bit. Then, of course, the main bit, the Class 4. Now again, up to the lower limit of 8424, there is nothing. Do we have here a trading profit assessment above 46,350? The upper limit, yes we do. Therefore, like with our employee, 46,350 minus, let's see if I can get it right this time, I didn't get it right, 8424 there. 46,350 minus 8424, that's at the main rate of 9%. And then, because we go up to 50,000, 50,000 minus 8424, that is the bit that enjoys the more generous lower rate. Oh, go apply. Look what I've done again. 50,000 minus 8424. I've got 8424 on the brain here. It is, of course, 46,350 times 2%. Okay, well, after a chapter fraught with my computational problems here, hopefully we've now seen how it is that we compute both Class 1 contributions, be they Class 1 employee, be they Class 1 employer, be they the combination of those two that a question asks you to compute, or be it, indeed, their Class 1A NICs as well. We should know how to compute those various contributions. If dealing with a self-employed, is it Class 2? Is it Class 4? Again, probability is it will always include Class 4. The question is whether they also want Class 2. Use your rates and allowances table with those lower and upper limits. Use them hopefully more successfully than I have managed to do there over the last half an hour or so. And make sure we get our 2 marks on any such objective testing question. Well, having dealt now with the 2 taxes that relate directly to income, albeit most recently only to earned income, we'll now turn our attention in our next chapter to the next and probably most other substantial personal tax, capital gains tax there. Look forward to talking to you about that in our next lecture and indeed several lectures thereafter.